What's up, everybody? Jimmy V here. Hope you had a terrific weekend. As always, thanks for joining me. I'm excited to be here. I feel like I've got some good updates for you as it relates to VA loans. And really, it's about last week and where we see the market going. So if you're joining, do me a favor, sound off, right? What branch of service that you were in and where you're watching from. And lastly, arguably most importantly, if you have any questions, please drop it in the comment section and I will do my best to answer it because, there's a lot of misinformation out there that exists about VA loans. It literally happens every single day, all the time. It comes from real estate agents. It comes from mortgage loan originators. And it also comes from friends and family too. They just don't understand VA home loan benefits. And it even comes from Dave Ramsey, if you could believe that. So if you're watching, do me a favor. Hey, what's up, Nathan? I see you're in the Navy, still active, 2 years from retirement. Outstanding, my man. Thank you for your service to our great country. Where are you stationed at, Nathan? The Marine Corps was a department of the Navy. I know you guys know that. You love to remind us of that. But anyhow, man, hey, really, thank you for your service. Happy you're here. So what questions do you guys have for me today? If you do have a question, drop it in the comment section and I'll make sure to answer it for you. But there is something that happened on Friday that I think is important for my veterans and active duty service members to know. And that is Fed Chair Jerome Powell did a speech in Wyoming, Jackson Hole to be specific. And the reason why this speech is so important is because every year, all of the Fed members travel to Wyoming and investors are watching their speech. They're delivering a speech there, I should say. And so the speech was considered to be dovish. Okay, now let me tell you what dovish means and why it's important for veterans and active duty military to understand that term. Dovish means that they are looking at inflation. In other words, that they need to do something about it because inflation has been going lower. That's a dovish outlook on the economy. In other words, it's not performing as well as it could be. So what does the Fed have to do for that? The Fed has to cut or decrease the federal funds rate. So in essence, if the Fed is going to decrease the Fed funds rate, that's a good sign that mortgage interest rates will be going down in September. And that's exactly what happened on Friday when Fed Chair Jerome Powell delivered his statements and essentially all but kind of lined the path to a rate cut in September. I would say that it's a virtual 99.9% lock. Sure, something could happen, but it looks like the Fed is going to decrease rates. So if you were hanging around with me, on the last call, I talked about when the Fed decreases the rates, if that impacts mortgage interest rates favorably, that we could see interest rates go lower as a result. And so what happens if interest rates go lower? It means that there's going to be more buyers that are going to come back into the marketplace. Well, that's a good question. What happens if buyers come back into the marketplace? That means they're going to be competing, right, for the inventory that exists. What happens if they're competing for the inventory that exists? Prices are going to go up, right? Because sellers have more options and the needle moves back towards a seller's market. So I've been really kind of trying to hammer this home for a long time in saying that if you're a veteran or active duty military service member watching this video or this channel, and you have a piece about purchasing a home, and of course you can afford the monthly payment and it buys you what you're looking for, consider doing it now before this tidal wave of new buyers enter back into the marketplace. And now you may not be able to have the same terms. In other words, negotiate for closing costs, negotiate off the price, etc. We could find ourselves in a multiple offer situation, right? And if that happens, they're saying, hey, bring your highest and best, right? And now we don't have the upper hand anymore. So a lot of the contracts that I'm seeing from veterans across the country that watch this channel that use me for their VA home loan are getting their closing costs paid, right? They're able to negotiate off of the price. We have a veteran right now purchasing a home who was able to negotiate $10,000 off for a roof repair. And in addition to that, he got the home for $40,000 less than it was listed. Guess what happened? The home appraised for $40,000 more than he was buying it for. So I'm not saying that that's going to happen every time, but I am seeing these types of things happen in the marketplace right now. And I'm not sure if interest rates go down considerably between now and then, if these same types of opportunities are going to be as easy to find. Good to go? So Nathan, I see your question here. Southern California, plan on buying 2 houses in Tennessee after retirement. I'm tracking, man. So a lot of veterans don't know this, but you can have more than one VA loan at a time. So Nathan, here's the playbook for that, brother, if you're still watching. You want to buy your first home, okay? Live in it for 1 year, and then move out of that home, or, after it's been 1 year, move out of that home and buy that new home, more desirable location, bigger square footage, house with the pool, whatever the case may be, right? You can do that. And now you can own 2 homes with a VA loan. Now you might say, well, Jimmy, how do you do that, right? Think about it like this, Nathan. Every veteran has about $806,500 worth of a VA loan to use. If they use $300 on the first house, then they've got about $506,500 left over to use on the next house. You following me along on that? So that's a little bit about how to deploy multiple VA loans. Now think about it like this, right? Let's say that you wanted to have 3 VA loans. You can do that, right? And I've helped veterans buy 3 houses with a VA loan. Now they've built a real estate portfolio. That's what I'm talking about. That's what I want for my veterans that watch this channel, right? It's really neat to see what YouTube has done from an entrepreneurial perspective, helping veterans to build and create wealth through watching channels like mine or others, right? To kind of put them in that mindset, because the military doesn't teach this stuff. Can I get an amen? Right? Throw it in the chat box if you agree with me. But the military doesn't teach this stuff, right? VA certainly doesn't advertise the VA loan, right? So there's a lot of misconceptions about how it works, right? And why it's such a powerful loan. So why is the VA loan so powerful? That's a good question, right? Because it doesn't require any money down. Now, that doesn't mean that you can't put money down if you choose to do so. It just means that it's not required. It has lower interest rates, right? So if you compare a VA loan to an FHA or a conventional, you're going to find that it's more competitive. It also has no private mortgage insurance. So unlike FHA and conventional, when you're borrowing above an 80% loan to value ratio, you don't have to pay PMI, right? So these are all things that help you to save money in the form of monthly payment and interest paid to the lender. Good to go. So Nathan says, do you think next year is the most ideal time to avoid the possible high demand of the lower interest rates? I think right now is a good time, honestly. And I'm not just saying that. I mean, I'd tell you if I didn't think so. I think that next year, I think it's going to be a real flood of buyers entering back into the marketplace. I wouldn't be surprised if we see kind of a mass entry of pent-up demand buyers, because guys, there's been a lot of buyers on the sideline, and I personally believe that interest rates are going to go down even more. And the reason why I think that is because you've got a cooling labor market, inflation has been moderate, and so I wouldn't be surprised to see interest rates in the 5s next year. And if I really want to make a bold prediction, I might say high 4s, right? If that happens, it's going to be bananas, okay? So if you're watching the video right now, do me a favor, comment what branch of service you were in. And lastly, I'm answering your questions on VA loans. We could take this wherever you guys want to go, all right? So there is really no set agenda. I have an upload that I'm going to be submitting this week that talks about how long it takes to close on a VA loan. So if you guys, well, since you're here, I'll just tell you, I mean, that's a good question to ask. You guys are going to get a sneak peek of the video here. But, a lot of people think that VA loans take longer to close. Let me let you in on a little secret. Can you guys hear me okay? All right. You ready? The VA does not lend the money. So even me, Jimmy Vercellino, mortgage loan originator who specializes in VA loans, right? Even I am not using the term correctly. Now, conversationally, we use VA loan all the time, but it's not a VA loan per se. It's a VA guaranteed loan. So why am I saying that? Hey, Questy, what's up, man? Nice to see you again. You were here last week. Virtual fist bump, all right? Happy you're back. Navy, Fleet, Marine Force Corpsman right there. Devil Doc. All right. So VA guaranteed, excuse me, loan. All the VA does, you guys, is guarantee the loan by 25%. So Questy, let's say that I'm making you a loan for $100,000. okay? And Nathan, you're still in the chat with me here, so I'm going to role play with you for a second. Question, I'm making you a loan for $100,000. Nathan says to me, hey, Jimmy, you know that loan that you just made Questy? I say, yeah. Nathan says, I'll guarantee that loan by 25% in the event that Questy defaults. Now, Questy, we know that's not going to happen to you, right? But using this as an example, that's all the VA does. In this case, Nathan being the VA, he guarantees the loan by 25%. That's it. So why do I share that with you? I share that because VA is not lending the money, it's the mortgage lender. And if the mortgage lender is lending you, the veteran, the money, right, it's up to their turn times, right, to be able to get you into your home. So different lenders have different turn times, right? So if you really want to go by the book, you say, well, Jimmy, how fast can you close on a VA loan? What is like the fastest possible way to close on a VA loan? You guys ready for this? Do me a favor, type it in the chat box with your guess on how quickly a VA loan can be closed. Let's see what you guys come up with. What do you guys think? Is it 30 days? Is it 21 days? Is it 45 days? Let's hear from you. 7 days. Okay. There's one. All right. All right. Nathan says 3 weeks. All right. 6 weeks to 6 months. Good question, Jay. Okay. Epiconvo says 10. All right. Questy, you're spot on. All right. It's 7 days. All right. Everybody give him one. All right. Nice job there. I don't know if that's a guess or if you're just well educated on the VA home loan benefit, but in all actuality, the absolute fastest a VA loan can be closed is 7 days. And the reason why is because we as mortgage lenders have to adhere to something called TRID, the TILA-RESPA integrated disclosure. And if we operate according to TRID, which is the law, you cannot close on a mortgage loan faster than 7 days, okay? So that's the technical answer to closing on a house, okay? Questy says, wow, definitely a guess. Nice work. All right, so that is the technical answer to closing on a house at 7 days. However, it's highly unrealistic, okay? So generally speaking, here's what I tell my veterans, and I'm letting you guys in on the upload from this week. You won't have to watch it, but you can still give it some love and give it a like if you choose to do so, all right? But generally, it's about 30 days, okay? You want to have enough time built in, right, to the transaction to order the appraisal, to go through processing, to go through underwriting, perform your inspection period, right, draw your closing documents, go into the title company to sign your final loan documents. Can it be done sooner? Sure. If you want to rush it, I'd say anywhere from 14 to 21 days, okay? But my point in sharing that is one lender might say 30 days, another lender might say 45, and another might say 60. So when you're speaking to mortgage lenders, and by the way, if you guys would like to reserve a time to speak with me, you're more than welcome to do so. You can visit my website, valoansforvets.com, and we can carve out some time to speak together on a one-on-one. But when you're speaking to mortgage lenders, right, it's important that you set up a plan of attack, right, on how quickly you want to be in that home, number one, and number two, that's in alignment with the lender, as well as your real estate professional, as well as the sellers too, because the sellers have a say in it, right? Some sellers are like, heck no, I'm not selling you my house in, 7 days or 14 days. I need some time to move out. And that's completely understandable, okay? So Epiconvo says, can a seller pay off debt even if they don't need it to pay off to qualify? That's a good question, Epi. So I'll speak to that for just a second and say, yes, they can. Okay, so here's the way it works with VA loans. I'm quoting you the VA Lender's Handbook where it says, in the event of seller concessions, typically it's 4%. 4% of the loan amount, Epi, okay? 4% of the loan amount or purchase price. Now, what it says or what it goes on to say is don't include normal discount points or customary closing costs when determining whether or not the seller concessions exceed 4%. You say, well, whoa, man, that kind of breaks my brain for a second here. What the heck does that mean? It means exactly that, Epi. You can use the seller concessions to do things like pay off debt to qualify, right? Or pay off debt at closing if you choose to do so. You can even use it to buy out your lease, A lot of people don't know this. A lot of real estate agents don't know this. So let me ask you the question. It's like, are we possibly or potentially leaving money on the table when we're negotiating with sellers? I think we are. And so this is the power in VA loans. There's not another loan type, you guys, that this can be done with. Good to go? All right. So what other questions do you guys have? I see another one came in here. Epi, let me know if that answers your question, okay? Questy asks, if a house has been on the market for a while, is that a red flag? Is it a home that's easier to negotiate for a seller, to negotiate a lower cost? I'm going to put my home buyer hat on for a second. If a home has been on the market for a long time, Questy, I'm asking that question. Why is this? What's going on with this house to make it look like, or why has this house been on the market? Is there something wrong with it? So, my spidey senses are tingling a little bit. I'm right there with you. But I do absolutely agree with you that homes that have been on the market for longer allow you, as the veteran, to have more of an upper hand potentially. I'm not saying that this is going to be the case all the time, but potentially have an upper hand in negotiations, right? Because they may be getting more desperate as each day goes on. So sure, you can negotiate on price, right? You can negotiate with seller concessions, right? Get them to pay your closing costs so that way you don't have to come out of pocket with any money when purchasing a home. Now, I do have a lot of veterans that ask me this question. Oftentimes, you guys, and let me know if you've heard this before, but they'll say, well, it's a VA loan. I don't have to put any money down and there's no closing costs. Not true, okay? Anytime somebody is purchasing a home, there are closing costs associated with the acquisition of the home. So what do those consist of, right? Depends on what state you're in, but there could be taxes, right? Prepaid interest, prepaid taxes, prepaid insurance, the first year hazard insurance premium. There's title and escrow related charges, right? In addition to that, there's lender costs, like the fixed costs that it takes me to originate your loan, right? So there's all of these costs that are built into the transaction. Heck, there's even closing costs when you buy a home for cash. So yes, the VA loan is no money down, but it does have closing costs, or I should say buying a home does have closing costs that you will need to budget for when you're purchasing a home. Good to go? If the seller's not paying for it, then yeah, you're going to need to do that. And that's a conversation that I have with my clients up front about what the estimated cash due at closing would be. So that way they've got a plan of attack, right? When they're looking at homes and they can budget properly and know, okay, Jimmy said it's going to be roughly 3% of the purchase price, $300,000. I'm looking at $9,000 due at closing. You tracking with me on that? Yes, Epi, that's absolutely right. They've called that a VA no-no in the past. Good to go. So what other questions do you guys have for me? We talked a little bit about Fed Chair Powell, what he said at Jackson Hole, Wyoming, took a dovish tone, meaning that he thinks interest rates, or it sounds like it's all virtually but a lock, that the Fed is going to decrease the Fed funds rate in September, which could have a favorable impact on mortgage interest rates. Let's see here. We have a question come in here from Mebzer12. Okay. You have any advice on how a VA construction loan works? I already have the land and want to use a VA construction to finance my build. Yeah, really good question. So yes, it can be done. And this happens to be one of the more, you guys mind if I get a sip for a second? I need a quick sip here. All right. So yes, it can be done. And a lot of people don't know that it can be. And this is kind of one of the best kept secrets about VA loans. And I need to do an updated video of it. And I have some videos on this that I've done before. But basically, here's how it works, okay? You can build a house with a VA loan. A lot of people don't know that. What you need to have up front are the plans, right? You need to select the builder, right? You need to have the bid from the builder, the specs, or like kind of the schematics, if you will, of the home. So you're going to pre-qualify just like you would any other loan, right? So when you do that, pre-qualify for the loan, right? What's going to happen is you're going to get a new construction loan on the property, okay? So that construction loan is typically an interest-only loan. Now, here's the unique thing about VA loans, you guys. A lot of people don't know this. The VA does not allow you as the veteran to pay interest during the construction phase. So somebody has to pay the interest, right? And so you as the veteran can't pay it. So either A, the builder can build it into the price of the home, or B, you could set up a contingency account that essentially pays it out every month for you, so that way you don't have to pay it. So I'm happy to go into greater detail on that for you, Members 12. If you'd like to set up a time to speak with me, we can absolutely do that. Hey, thank you for the love, you guys. To see the love coming in here, that's always a cool thing to see. So Nathan asks, no money down during COVID, 2 to 3% made sense, but now over the next few years, a down payment on a 5 to 6% seems appropriate, in my opinion. Yeah, I think it's, certainly, individual specific, Nathan. A down payment is never a bad idea, doesn't hurt, only lowers your monthly payment and the amount of interest that you're paying the lender for sure. The down payment also has some additional kind of value add features with the VA loan that a lot of people don't know about. And that is that if you put down 5% on a VA loan, Nathan, your VA funding fee is reduced. So typically a first-time user funding fee on a VA loan is 2.15%. Okay. For a subsequent user, somebody using their VA loan for the 3rd, 4th, 10th time, it's 3.3% with no money down. So the cost of doing business goes up. And by the way, why does VA charge a VA funding fee? Well, we've got to make sure that the VA program stays around, right? You guys would agree with me on that. So in order to do that, the VA has to charge money on our VA loans, right? And they have to take that money and use it to be able to send out the claims for veterans, right, that are delinquent, or I should say that go into foreclosure on their houses, right? So in order for us to kind of continue to have this program, the VA has to charge it. However, here's what you need to know. How many of you guys know this? If you are a service-connected veteran of as little as, take a guess, what do you think the VA disability rating needs to be in order to have your VA funding fee waived? Go ahead and write it down there for me in the chat box. What do you guys think? Okay. All right. You guys are good. All right. It's 10%. It's 10% of, or I should say in this case, it's a 10% VA service-connected disability rating. It gets your VA funding fee waived for life. You never have to pay it again. Okay. That is flippin' amazing. Okay. So you're never going to have to pay for a VA funding fee again. Now, in some places in the nation, you are actually able to, if you are 100% P&T, get your property taxes waived as well. So I know in some counties in Texas, what's up, 67 man chiming in? What branch of the service were you in, brother? So I know in some counties across the nation, i.e. in Texas, you can actually get your property taxes waived, and property taxes in Texas are not cheap. So when you're looking for homes, if anybody in this chat room today is 100% service connected, it's like, take advantage of that, man. Take advantage of that. All right. What states are you guys in? Where are you guys sounding off from? I'm curious. I'm in Arizona, and it is absolutely sweltering right now. In August, it's monsoon season. So not only is it 109 to 112 every day, but there's also humidity, and it is absolutely nasty. I went to Costco today. I had beads of sweat rolling down my face. It was absolutely brutal. So Texas and using 100% tax exemption. I love it. I love it. So what other questions do you guys have for me? If you're just joining, I'm answering VA loan questions. I'm a mortgage loan originator. I specialize in VA loans. I've been doing this now for 20 years as of July. I got out of the Marine Corps in 2005. I had no idea really what I was getting myself into. I had a difficult time communicating with civilian home buyers, but here's what I did know. I did know what a DD-214 was. I did know what BAH was, BAS was, a COE was, right? I spoke the language of the veteran and active duty service members. So I devoted myself, or my mortgage practice, to helping veterans and active duty military. That was a natural fit for me in transition. And today, through this YouTube channel. I help veterans all across the nation with their VA home loan benefit, and this work provides me deep meaning. So thank you guys. I appreciate you. And by the way, you guys are keeping me busy. We have a lot of veterans that contact me from this channel, and I oftentimes get phone calls from people. They go, "Oh my God, Jimmy, I can't believe that I'm really talking to you." It's like, if you guys call me, yes, that's my wife right there. You guys are going to get me on the phone. You're not being patched through to a 1-800 number like a lot of other, bigger kind of corporations, if you will. It's me. We lock arms together. I help you put rounds down range with your VA home loan benefit. Roger that. So do you guys have any other questions? I don't really have a set agenda. I've talked a little bit about what happened in Jackson Hole, Wyoming. I've talked about the VA guidelines when it comes to seller concessions, VA funding fees. What's up, Toby? I see you here. Toby says, I'm currently paying off debt, credit cards before purchasing a home. I think you mentioned something about being able to tie that in with a home loan. How does that work exactly? So do you own a home now, Toby? Just for clarification, let me ask you that. Do you own a home now? Tell Christian to hop on the game. All right, good to go. So do you own a home now? Renting home. Okay. So yeah, Toby, what I said is you can use seller concessions to pay off debts in order to qualify for a house at closing. Now, you still have to have the necessary credit score requirements for the lender. So what are those necessary credit score requirements? That's a good question. So it all depends on how we structure your loan. But I had an interesting conversation just last week or this week with a new investor, okay? And so the investors are the ones that make the loans. I'm the one that originates them. And so typically I've told my veterans that they need to have credit scores at a minimum 580 in order to obtain a VA loan. Now, I want to shoot you straight here and say that, if you can optimize your credit scores, right? If you can, get that credit score above 600 or 620, guys, you're going to get more favorable terms in conjunction with the loan, i.e. lower interest rate, lower cash due at closing, et cetera. Right? So I always want my veterans to have an absolute or, do their best to optimize their scores going into it. However, the minimum that we can go right now is 580. However, I just picked up another investor that allows us to go all the way down to 500. Now, I have some concerns there. I want to make sure that the veteran is in a place of strength, right? Going into a home purchase, we want to set them up for success and certainly not failure. But this is an option that I'm going to be talking about in upcoming videos about, sub 580 credit scores and veterans being able to use that. Now, of course, the higher the credit score, the better the financing terms you're going to get. And you always want to set yourself up for success going into a home purchase. Okay. So does that answer your question, Toby? Let me know if I answered your question or not. What other questions do you guys have for me? By the way, if you guys feel like I've earned it thus far and provided value, consider showing your love, clicking like on the video. That way it helps to boost the algorithm, help educate more veterans, active duty service members, real estate agents, and maybe even Dave Ramsey. You say, Jimmy, come on, man. Did you just take a cheap shot at Dave Ramsey? No, not really. But Dave Ramsey has said some things about our VA home loan benefit that I agree with. And you guys, if you've watched any of my videos before, you've probably heard me say that I love Dave. He's the one that taught me when making a buying decision, look for somebody with the heart of a teacher and not the heart of a salesman, right? Those are two very different things. But Dave has talked some, as Coach Prime would say, some bull junk about our VA home loan benefit that I disagree with. Right? He said that VA loans are more expensive than any of the big three. That's just not true. Like I said, I love Dave, but he gave veterans bum scooping that information, and I'm not down with that. I don't like that. Okay. So what other questions do you guys have for me about VA home loan benefits? Okay. While you're thinking of your questions, I'll talk a little bit about some of the items that you may need in order to purchase a home. So if you want to be ready to go when you talk to me or another mortgage lender, you're going to want to have a copy of your VA Service-Connected Disability Award letter, okay? Your W-2s, your pay stubs, most recent 30 days worth, okay? 2 years of tax returns, 2 months of bank statements, all pages, even if the page is blank, okay, a copy of your certificate of eligibility. We can request a copy of that for you, or you can get it yourself through your e-benefits portal, or you can go to va.gov and retrieve a copy there, okay? And then lastly, what else did I miss there? I think that's pretty much it. You know, there could be other things that the lender asks you for, and that's totally normal. Just be prepared, ready to go for that. And if they ask you for something, take it seriously. Don't drag your feet, right? Because we have a job to do, and that's get you into your home quickly and efficiently. Good to go. And we can only move as fast as our veteran, in this case, to get into the home. So I have a policy on my team that when we work with veterans, we ask for things within 24 hours or less. Now, we don't do that to be pushy. We do that because we've got a job to do, right? We've got a mission to accomplish. That mission is to help you buy a home. And so I do want to say something really quick. If you're watching this video right now and you don't feel like you're ready to go quite yet, that's okay, right? Continue to gather information. I uploaded a video recently. It talked about BAMCIS, right? BAMCIS, old Marine Corps term. Well, begin the planning. That's what you're doing right now. Okay, begin the planning. Learn about the VA home loan. Learn about the credit score requirements. One of the things that I love to tell my clients is if they come to me, they're not quite ready yet. It's not a matter of if you can become a homeowner. It's when you will become a homeowner. Good to go. You deserve it. You fought for this country, right? You defended our nation, right? And you deserve to create wealth in your home, make memories in your home, raise a family in your home, right? Sell your home for a profit. Like, you deserve that, right? That's what the VA home loan benefit is designed to do. And there's all these sorts of neat features that we can use. Question for you guys. How many of you actually have a VA loan right now? How many of you guys have a VA loan right now? I want to hear from you. If you have a VA loan, go ahead and type it in the chat box right now. Here's the reason why I'm asking that, Nathan, okay? So the VA offers something called a refinance as well. A lot of people don't know this, but you can actually refinance with a VA loan too. There's two types of refis. There's a cash out. There's also what's referred to as an IRRL, interest rate refinance reduction loan, okay? Now, typically, this is also called a streamlined refi. So if interest rates go lower, the neat feature with our VA loan is that we can do a new VA loan with no appraisal, okay, no income documents, no asset documents, okay? It's really a streamlined process, and that's why they call it that. It's designed to get you a lower interest rate. So, you know, I'll continue to update you guys on what's happening in the marketplace, right, with what's going on with interest rates, so that way you guys can make informed decisions on when you're ready to either A, buy a home, or B, refinance. But this is a neat feature that can be done. You can also use a VA loan to cash out on an existing home. Now, it's got to be your primary residence, right? But you can borrow money against your house. So let's say, for example, you know, the veteran's home, I'm going to do math for Marines here, okay? Veteran owes $50,000 on their home. They can go up to 90% of the home's appraised value. So in this case, if it was a $100,000 value home, right, they can go up to $90,000 on the new loan amount, allowing them to get that equity in their home and deploy it however they see fit, right? So I'm at the age now where I'm staring down the barrel of 2 kids going into college, right? Somebody's got to pay for that, right? So my point is that you can use it to pay off high interest rate credit card debt, send your kids to college, invest, whatever the case may be. It's your money. You can do whatever you want with it. Good to go? What's up, Guitar Gardens? Guitar says, I got a VA loan 10 years ago for $500K in California. I want to rent it out and use the VWM-VA. I'm not sure what you're referring to there for the new place. Can I use the existing VA loan maximum to buy a new home? So here's what you can do, Guitar. You can use the remainder of the VA loan entitlement that you have left over. So depending upon what county you're in California, there's a lot of what's referred to as high-cost counties, okay? Now see if you can follow me along on this. In some counties, like where I'm from, the San Francisco Bay Area, go Raiders, all right? But where I'm from, Alameda County, right, the conforming loan limits are much higher. Why is that? Because the cost of living is significantly higher, right? So if that's the case, right? Let's say, for example, Guitar, you were looking at a home in Alameda County. This is just an example that might not apply to you. But if you borrowed 500,000, you'd have about another 500,000 left over to buy towards a new home with no money down in Alameda County. You tracking with me on that? Okay. So my friend is a huge Raiders fan. Outstanding, outstanding. There's always next year for our Raiders. But yeah, I hope that makes sense. What I'm saying there, Guitar, let me know in the chat section if it does. Good to go. And like I said, guys, if you're feeling like I've earned it, show your love, click like on the video so that way we could pump this stuff out to more veterans and active duty military as well. So I want to take it one step further, Guitar. Okay. Let's say that, the home that you were looking at was valued at somewhere around 700,000 and you only had 500K left over to use. Do you have to come up with the full $200,000 difference? What do you guys think? Type it in the chat box. Okay. So you see that there, right? 200,000. Here's all I do. I take the difference and I multiply it by 0.25%. Okay. And that comes up with the required down payment of $50,000. Right? So in that specific example for you, Guitar, depending upon what county that you're in, if you said, well, Jimmy, the remainder of the amount that I have left over is not going to get me enough, then here's what I would tell you, brother. Take the purchase price minus out your maximum VA loan amount. That difference, we take it and we multiply it by 0.25%. And that ends up becoming, whoops, that's my wife again. That ends up becoming the down payment. You tracking with me on that? So Guitar, if you want me to kind of spend some time with you individually on that, you're welcome to reach out to me on my website, schedule a time to speak with me. It's up at the top right, schedule a consult link. And I guess, Butte County, Northern California, outstanding. Okay, so I guess this is a good opportunity for me to just go ahead and put in my website in the chat box here, VALoansForVets.com. That's how you guys can find me on that. Tracking? All right. What other questions do you guys have for me? Guys, I don't have a set schedule right now. My kids are at tennis. I'm just chilling, hanging out with my veterans on a Sunday night. Don't have anywhere to be. So, we can hang out as long together as you guys are asking me questions. All right. If I don't see any more questions come through the chat box here, I'll know that my time has come to an end. Roger that. So, where do we go from here? I think that this is important to briefly talk about. It's like, where do we think interest rates are going to go? So 67 man, identify yourself. Let me ask you, who are you? And I'll answer your question. Good to go. 67 man says, do you know a kid named Christian? Maybe I do, maybe I don't. Identify yourself and I'll let you know if I do. Roger that. All right. So where do interest rates go from here? All right. Interest rates from here, I think, is all going to be dependent upon what's happening into the economy or what's happening in the economy. If you want to keep your finger on the pulse of what's happening in the economy, I'm going to give you a very simple framework on how to do that. Okay. Watch what happens with inflation. It's that simple. Okay. There's two reports that mortgage lenders look at, right, to determine what's happening with interest rates. One is the CPI report, Consumer Price Index. This measures a basket of goods and services. The other is the PCE report. This is the Fed's favorite measure of inflation. Okay. So if this is the Fed's favorite measure of inflation, we're rooting for it to go down, right? Inflation, simply stated, stinks, right? We don't like inflation. Why? Because our purchasing power does not go as far as it used to, right? So if the PCE report, the Personal Consumption Expenditure Report, this measures how Americans are spending their money and what they're spending it on. If that report, or excuse me, if that report goes lower, if that inflation shows that it's moderating down to the Fed's target inflation rate of 2%, we're going to celebrate good times and we're going to see interest rates go down as a result. So I hope that answers, or I hope that kind of gives you some additional insight on, what happens with inflation and VA loans. Okay, so I've got a youngster on here that goes to school with my son, and yes, I do know Christian. He's my son. Roger that. So Preston, what's up? I see you, pal. Happy you're here. All right, tell your dad I said hi. All right. What other questions do you guys have for me? Okay. Anything that you'd like to know? Remember, this is your turn or time to ask a mortgage loan originator who specializes in VA loans. Don't be bashful. Like, this is why I'm here. This is why I'm carving out, 45 minutes through, on a Sunday night. So Jay says, after applying through Luminate, which is the bank that I partner with, VA loans for vets, what should you expect? Good question, Jay. So once you submit an application, you'll hear back from me and a member of my team. We'll send you a list of the necessary documents needed to complete the review. And then I personally will follow up with you to review your loan application and set up a plan of attack to ensure that your monthly payment is within your budget, number one. Number two, the cash to close is also within your budget. And so we'll kind of custom fit the mortgage to your individual needs. Once that happens, you've been pre-approved, you're cleared hot to go out there and start shopping for a home. Roger that, Jay? So here's a question that I tend to get more often than not, and that is simply this: when should I start the process? It's a good question, right? It's a good question. Like, when should I, get all of this going? And here's what I typically tell my veterans: roughly 90 days, okay? 90 days from the time that you want to be in your home. Okay. Why is that? Well, your credit report's good for about 90 days. Okay. So if your credit report's good for about 90 days, we'd ideally like to kind of, one shot, one kill. We don't want to have to, if we can avoid it, update your credit report. So the first week is the pre-qualification phase, and the other 11 are dedicated to searching for a home and closing on a home, right? So it's really that simple. I would say plan for 90 days in advance when you want to be in your home to submit a loan application when you are ready to do so. So if you're just joining the call, what's up? Or I should say the stream. What's up, everybody? I'm Jimmy Vercellino. I'm a Marine vet. I specialize in VA loans. And really what I'm doing right now is just answering questions about the VA home loan benefit. I told you guys that I wanted to be more intentional about educating veterans and active duty military. And one of the things that I've learned is that a lot of veterans are on YouTube on Sunday night, myself included. So I'm happy that you're here. If you have questions about the VA home loan benefit, throw it in the chat box. Like I said, don't be bashful. There's a lot of misinformation out there. Your well-intended, or I should say well-meaning brother-in-law who's a real estate agent may have told you something about a VA home loan that's not true. And if he did, or she did, then we want to set the record straight. All right. So we want you to have, real-time information about your VA home loan benefit. So that way you can make an informed decision when the time comes that you're ready to move forward. Roger that. So do I have any other questions? I see that I've got about 12 of you here. If you guys are enjoying the stream so far, show your love, click like on the video so that way we can educate more veterans and active duty military. All right. If you have a friend or a family member who's a veteran and wants to learn more about VA loans, send them to the channel, guys, right? There's a wealth of knowledge on here about VA home loans that are designed to truly educate veterans, real estate agents, etc. So any other questions before I let you guys go here? I'm going to stick around here for about another 10 seconds. If I don't see a question come up in the chat box, I'm going to go about my Sunday evening here and watch some tennis. Good to go? Any other last minute burning desire questions? All right. Well, if that's the case, all good on this end. I appreciate you guys hanging out with me on a Sunday night. If you ever have questions and you want to schedule a time to speak with me, I'm not hard to find. You can email me. I'll put it in the chat box here. Jimmy@VAloansforvets.com. Okay. That's my direct email address. Yes, you get me, right? Not somebody else. In addition to that, you can also go to my website, schedule a time to speak with me. We'll carve out some time together. We'll make sure that that all of your questions are answered. Tovi says, I appreciate your videos. Keep it up. Rah. All right. My pleasure, Tovi. Thanks for the kind words. I appreciate that. So yeah, I'm optimistic. I'm truly optimistic about where we're heading in the market. I've closed a lot of VA loans in the last 3 years for people that are sitting at 7, 6.75, 6.5, 6.25, right? That are like chomping at the bit to close on a VA loan. And I truly believe that interest rates are going to go lower. I haven't had this feeling quite like this in some time because of all of the economic reports that are filtering into the economy. So that's what I'm seeing. You know, if you guys are in a position where you feel like you're ready to move forward, I would say consider doing it. Consider doing it because, you know, there's one thing that we've learned about real estate. Historically speaking, it's done one thing. Type it in the chat box if you know what I'm referencing here. What is the one thing that real estate has done historically speaking? It's go. Somebody type it in. Come on. Come on. Up. All right, I'll do it for you. There you go. Thank you, Toby. I appreciate that. Real estate has always gone up. Now, that doesn't mean that it's not going to go down some years, right? But here is something that's interesting. Let me ask you guys a question. When you invest in your 401k every month, do you ask if it's a good time to invest in your 401k? If you're like me, you probably don't. Why is that? Because we're operating under the assumption that over the next decade, 2 decades, or 30 years, right, the stock market or stocks, equities, bonds, they're always going to continue to increase. And that's what's happened with the stock market. Well, real estate is no different. So a lot of people get fascinated about, oh my God, you know, do I time the market? You guys, I can't time the market, right? You can't time the market. Nobody can time the market perfectly. Now you might get lucky, right? And it's okay to try and make an informed decision on when the best time to jump in is. But historically speaking, real estate has only gone up, and real estate happens to be the only investment that has utility that you can live in. There's no other type of, you can't live in a stock. You can't live in a bond. You can't live in Bitcoin. I'm a huge fan of Bitcoin, but you can't live in it, right? And that's why having a primary residence that you can live in, like value in some ways should be like in the back of our mind. But now we're in a day and age where we refresh Zillow every single day to see what values are doing in our neighborhood. It's like our grandparents never did that. They bought a home, they lived in it for 30, 40 years, and then they sold it for a massive profit later on, right? It's the same thing here. So all I'm saying is, you know, try to not stress yourself out with timing the market perfectly. If you're in a position to do so, I've given you some indicators on why I think now is better than waiting, right? Because you can get more favorable financing terms, negotiate with the sellers, right? Get them to potentially pay your closing costs, maybe discount the price. That opportunity may not be here in 6 months or 12 months. We just don't know, right? And I'd be lying to you if I said I knew. But one thing that I know is that if you get in, you start building equity, right? Home values, historically speaking, have appreciated over time. Even people that bought a home in 2005, which I happen to be one of them, the worst time to buy a home since the Great Depression. It was referred to as the Great Recession. Even people that bought their homes then with a 50% correction in real estate values would still have an immense amount of equity in the home. Guys, I started kind of going off on a tangent there. Sorry, I told you I was done with the video and then I got excited for a second, so you'll have to forgive me, right? But yeah, I mean, a primary residence, right? Live in the home, hold on to the real estate, don't sell it, right? That's the key. That's the ingredient to success. All right, guys. So if you have questions, you already know how to find me, VALoans4Vets.com. You could also Roger up with me, shoot me a text. All right. And shoot me an email and we'll schedule a time to chat. So I hope you found this information to be of value. My name is Jimmy Vercellino, Marine vet, mortgage loan originator. I specialize in VA loans. I help veterans all across the country with their VA home loan benefit. And if the opportunity presents itself, be happy to be a resource for you. We can see if we can work together. Good to go? All right, guys. Thanks for watching. We'll talk to you soon.